Austin, good to see you. Today we get to talk recession-proof investing, 3 strategies for navigating market volatility. We've been hearing a lot of scary financial headlines lately. What's going on?
Yeah, so there's really three main topics kind of dominating the news headlines these days. And that would be, of course, the impact or potential impact of tariffs,
Hmm.
whether that be on China, Mexico, or even Canada. And of course, the potential effects that would have on inflation. And then lastly, Doge and the potential cuts there and what will that do to the broader economy. But I think if we kind of zoom out and take a 30,000-foot view, all of this has developed in just a few short weeks, really. And then coincidingly, we want to also think about our long-term plan, right? We never want to make knee-jerk reactions to any of these short-term things because we can make a reaction, right? And then some of these tariffs get rolled back or a deal gets done and markets reverse and we miss out on that upside potential because we made major changes to our portfolios.
We're going to do a deeper dive on that topic in just a second. But first, I have to ask because, of course, cash is considered king during recessions. Are you recommending investors allocate a larger portion of their portfolio to cash right now?
Yeah, so I'm going to modify that statement a little bit. And really, we believe here at Patriot Wealth that access to cash is king.
Yeah.
And I say that because when we have periods of heightened volatility, we want to have access to cash so we don't have to liquidate securities at depressed values to fund our lifestyle expenses if we're in retirement. And frankly, should we be raising more cash? Is a big question, and I think a fair one for a lot of folks in today's environment with all of this volatility. But I like to bring it back to the plan. We really need to have a retirement plan in place and not just an investment strategy, because if we're trying to develop an investment strategy and make these decisions on the fly when volatility is very high, we all are emotional beings, myself included. So it makes it that much harder to make the correct decision. So
Yeah.
really fall back to your plan. What does your plan require and need? And that will give you a sounding board for making a good decision.
So hard to not act like emotional human beings when we are those. All right, what do you think about dividend stocks and fixed income investments like bonds?
Yeah, I think both traditionally dividend stocks and fixed income investments like bonds kind of provide, number one, that diversification in a portfolio. And also typically they're a little bit more defensive in nature, pieces of the portfolio that can provide some downside protection in times of heightened volatility, especially that bond piece. And again, I would take it back to what is your overall investment philosophy and retirement plan? Were these items like bonds and dividend stocks a part of that strategy before
Right.
2 or 3 weeks ago, or were they not? And if they weren't, then I wouldn't add and make drastic changes based on recent developments. But both of those items, we believe, are a core kind of stabilizing piece to portfolios.
hmm Last, even during downturns, or especially during downturns, keep investing. This is known as dollar cost averaging.
Yeah, this is a really, really hard thing to do, right, Aaron? When we kind of feel most fearful in the markets and it feels the worst emotionally to continue those contributions, just think to yourself, that's when I absolutely should be continuing these contributions because with dollar cost averaging, it's really that idea of staying the course.
Yeah.
Don't try and time the market. Continue with your plan because we're getting more shares of the investments with the same dollars because those shares are obviously cheaper now. So again, stick to your plan, really try not to make knee-jerk reactions. And of course, when the recovery occurs, you're going to be giving yourself a pat on the back when you stick to your plan.
hmm People with a financial plan have greater long-term financial success. So, Austin, if somebody would like to sit down with you, even just to talk through these headlines, make sure that they are well positioned, what's the best way to reach you?
Yeah, you can give us a call at 919-322-4113 or send us an email at info@patriotwealth.com.
All right. Austin, thank you so much for your time today. I appreciate it.
Thanks, Aaron.